Hey everyone, I'm Marshall Sykes with Capitano Investing Group, and today I want to give you a quick overview of the Capitano Strategic Energy Fund, which will be investing into the Iron Horse Energy Fund 2. It's an oil and gas fund that's around $4 to $5 million is our allotment, and it's for accredited investors only. And we're looking to close this at the end of the month. But we may get a few extra days for it, hopefully. Anyway, I just want to go through this real quick, and there's 10 or so slides, and I'll be able to send these slides out later. But it's a very good opportunity to invest in an oil and gas deal, especially if you're looking for tax benefits in 2026. Just a short disclaimer that I'll let you read this on the video replay. But basically, all investments carry risk. Even if you invest in the stock market, there's risk involved. Um, or buying a property, there's always risk involved. So just read through that. Talk to your financial advisor, talk to your CPA if you need to before you make any kind of investment decisions. The summary of this fund really is it's something that again it's based on tax benefits. That's the biggest reason people invest in oil and gas deals. We will have monthly distributions after about 6 months. So towards the end of 2026, we should start seeing our first monthly invest distributions. And it's a diversified portfolio with multiple operators in multiple basins and multiple wells. That strategy I'll talk about more as we go through the slides, but it mitigates the risk in oil and gas and providing by doing those multiple kind of angles with this. Um, we're going to do 20 to 30 wells. 20 is the minimum, 30 probably be about the maximum. The IRR on this return is around 22% projection, as well as the target return is around 1.8x to 3x possible. We're investing this fund into Iron Horse 2. And the Iron Horse 2 team, you know me. I've been I was a retired Navy captain after 25 years in the Navy doing big projects. And I did the same with ExxonMobil for about a decade, where I oversaw a lot of big billion-dollar projects around the world. Now I run an investor community of Capitano Investing Group of about 300 or so executive engineers and veterans. Um, and I've known Courtney Muller with the Iron Horse team for over 3 years. We've been in investment circles together, and I've been wanting to do a deal with her for that long, but just finally had the opportunity to do that with her. Her team is made up of also veterans. Rick Bonneau is a Navy veteran, as well as the Landon Phillips is an Air Force veteran. And her daughter Alexis heads up investor relations for her and her team. Um, these are the metrics the Iron Horse team has. They've done over 180 deals altogether with across their team. Um, and they've been between particularly Courtney and Rick, they've been invested in over 1,200 wells. And you can see the rest of the numbers. They've done big projects together for 5 projects now, and they've had monthly distributions despite the decline in the oil price of late. So a very strong team, and I look forward to working with them on this project. This is their previous fund, in Fund One, Iron Horse Energy Fund One, where they had you see where the location of their wells were across what basins they were in. And they had around a $31 million fund. They drilled 40 wells. 30 of those have been drilled so far. And this closed in December 2025. So over the last 6 months, they've been able to drill over 30 of those wells. And they've already had monthly distributions starting in May 1st. But why invest in oil and gas? There's really four macro factors involved in investing. There's always demand for it. It's been persistent. Yes, sustainable energy is coming along, but oil and gas investments are going to be required for the next 75 years, according to the experts. And there's also been many years of underinvestment in this. A lot of institutional dollars left the oil and gas investment circles over 10 years ago. That's why we're able to get into it now as individual investors. But now the money is returning. So, for instance, Warren Buffett invested almost $60 billion in oil and gas just before his retirement. Um, so the smart money is moving towards oil and gas still. And again, there's a tax advantage structure with oil and gas that the IRS allows for because they want oil and gas investment. They want us to have energy security in the U.S. The Iron Horse strategy is threefold. Partner with major operators like Devon Energy and Continental XTO. Go in with the top producing basins in the U.S. and have multiple basins, and then have multiple wells in those basins because you want to have diversification in case one or two wells have problems or there's some kind of other thing with a basin in itself. So you want to have multiple options there so that your risk is mitigated. The how they Iron Horse underwrites their deals, they they're going to use a major operator. They're going to use $40 as a max break-even oil price. So what that's saying is even if even if oil prices go down to $40 a barrel for 10 years, of course, on average for this investment, you still get your money back. That's what break-even oil price means. They underwrite at $72 a oil and 350 for gas, for natural gas. And then they're always in the proven basins. Again, there's 90% tax loss. That's what they're looking for. That's the projection for this fund. And they at the maximum they're going to own 10% of any one well. That mitigates their risk. Other operators and other investors will own the other 90%. These are the five major risks involved in oil and gas deals. And really, you'll see that the biggest mitigation on this is to have multiple operators, multiple basins, and multiple wells. That takes care of a lot of these risks. The commodity price is also looked at. So again, the break-even oil price is $40 a barrel. I can go through these more with you if you're interested in an individual call. The fund itself for Capitano, again, it's a $4 million fund with 75,000 as a minimum investment. We're closing in June, and we're going to hold for 7 to 10 years estimated, or until the assets are sold. We'll do monthly distributions starting towards the end of 2026 or early 2027, with an estimated return of capital within 2.5 years. 90% estimated first year tax losses and 1.8 to 3x return. 90/10 is our splits, or 90% will be go to investors and 10% to the GP, which is Capitano. And then we're investing in Iron Horse 2 fund, which is an 83/17 split with us. So we get an 83% split from them. So overall, it's around a 75/25 split for investors that are investing in Capitano. So the investment timeline, the Capitana Fund's open now in June. They've already started acquiring assets. Iron Horse has. They have roughly 10 assets already that they're under contract with, and then the assets will start producing over the next 6 months, and with distributions towards the end of 2026. So you've already watched the replay if you've gotten this far. The data room is open at capitanoinvestinggroup.cashflowportal.com. And then you can go in there and place a commitment and sign the investor documents. You'll provide your accreditation verification status. You can either get a letter from your attorney or CPA and send it to me or upload it to the portal, or there's a third-party verification process in the portal that's relatively simple to use. Again, fund your investment by the end of June, hopefully. If you have any questions, please reach out. I'm happy to talk. I'm available to talk and look forward to speaking with you soon and look forward to you investing in this deal, hopefully. Take care. Bye now.